Business doesn't have feelings, right? It's just not your friend. Commerce, your competitors, everything about life in business is trying to kill you or get you fired. When hard decisions have to be made, you have to be dispassionate about them and just let common sense prevail. It's one of the hardest things, and not everyone can do it, and that's why not everyone's a CEO. My mother died when I was 25. My business failed when I was 38. We lost all of our money, all that kind of stuff. When you go through those sort of personal challenges, it does build a second skin. You do realize that life goes on, you just withdraw and then come back later stronger. And I thrive on that. We grew by 40%. All the things we tried worked. The first year of lockdown, our profits just exploded because we'd got everything in place. We were already remote. We already had the systems there. We already had the team in place. It just meant that when the wind blew strong, we went fast. You can't have a whole team of people like that because in the end it becomes too aggressive and everyone just kills each other. If you've got the right blend and balance of people that actually are up for the transformation, you can see that there's a common enemy, whether that's a competitor or internal systems or the market's changing. You've got something to fight for. That can be very powerful. Punch up. So if you're going to complain upwards, don't complain downwards, because if you complain down, it spreads and then you get negativity, which kills the flow. But also the managing up is very important, much more than managing down. I've always thought that in my entire career. I've always really invested in the relationship with my line manager and then one above. And it wasn't trying to get around the person above me. It was just to understand and empathize with their problem, who they're having to deal with and report to, and all the emotional vagaries of that.
Welcome to the iGaming Leader podcast. I'm your host, Leo Judkins, founder of iGaming Leader Mastermind. And on this show, I sit down with some of the most inspirational and forward-thinking leaders in our industry, diving into the real challenges, high-stakes decisions, lessons that shape our industry. If you're a VP, director, or an executive in iGaming, this podcast is built for you. Before we dive in, a quick thank you to our sponsor, SumSub, the full-cycle verification platform trusted by top iGaming operators worldwide. SumSub helps onboard players quickly, stay compliant, and prevent fraud, all without slowing growth. More information in the description. Hey everybody, welcome to the iGaming Leader podcast. I am here with Richard Dennys, who's a two-time CEO who has spent the last decade building, acquiring, and scaling digital businesses in performance marketing and iGaming. First at WebGame for 7 years, and then recently at Game Lounge for the last 2, where he's recently left. I would describe you, Richard, as a turnaround CEO whose leadership styles and decision frameworks are really grounded in some of these best business books that we've talked about a lot, but also sharpened through, some real tough battle scars. And that's what I'd love to talk about today. So I'm really excited to talk to you. First of all, welcome to the podcast.
Yeah, thanks, Leo. It's really nice to talk to you. Thanks for inviting me. Yeah, you covered a lot in that sentence. And before that, I was doing all sorts of marketing roles and I had my travel startup. So I've kind of seen a lot. I feel like that guy at the end of Flavio. I've seen things that people will never see. It's that kind of situation at the moment.
Let's start off there. You started off quite in traditional business, right? Working with traditional businesses. And I'd love to start there because from there, you started your own thing without a safety net. Can you talk to me a little bit about that start of your career and why you went from kind of the traditional to, I'm going to take some risks here, and the things that you learned from that?
I'm kind of the Thatcher generation. It's a UK thing, and people grew up in the 80s. I was 11 in 1981 when Margaret Thatcher kind of became all about there's no such thing as society. It's all about business. It's about small business. Get on your bike, make money. The big bang in financial services in the London city, everybody was leaving school and making a fortune. University wasn't so important. So I kind of followed that mantra, really. I couldn't wait to leave school and then drifted around for a few years. I wanted to be successful. I didn't really know what I wanted to do. My parents moved to another place. So I ended up working on a beach, in a bar, in a shop. I was just always trying to think of ways to make money with my friends. And in the end, I kind of stopped and did finally go to university when I was 22. So I was a mature student. And actually that was the making of me. That structured my thinking. I grew up there. I had some really good friends I'm still friends with now. And then realized that I had a penchant for data, even though I started, it was a degree in textiles I did, which is a weird one, but I started textiles, but then I migrated. It was a Manchester University. I migrated into a much more of a business and management degree in the School of Management. And it really kind of brought my business thinking out and I really enjoyed it. So I left there and I ended up working this is before the internet. I ended up working in database management. I found I was kind of focused on, I really like data patterns. I really find maths stimulating. I know it's not everyone does, but I just do. And that's kind of guided my career. So I've always been the guy in the team, in a kind of marketing team where I was working for PwC very early in my life. It was before it's called PwC, it was Kibbs and Nybrand. Working on market research and working on very early stages of email broadcasting systems. And then got hired by a digital startup in Bristol, which is why I went to Bristol, called Sift, and they were doing online communities, which is very, very early stage, and realized that it was all about relationships. And I had come from professional services marketing, which was partners and lawyers and accountants, trying to make relationships with these business people. And I realized very early on, it's all about that personal relationship. Doesn't matter how technical you are. At the end of the day, humans are humans and people by people. And it was all about that reputation and trust. I took that through with me. I was there 3 years at the startup. We did the classic thing where, we were all worth millions because the valuation went to 200 million, 300 million or something. We all had shares. And it was like, woo. And of course, the dot-com drop came in 2000, 2001. So that all dropped away. And I ended up still being friends with them, but leaving and just thinking, well, what can I do? My wife and I just dropped out into Italy and we went to live in Italy because we just fancied a bit of an adventure. Set up a travel business, just literally guiding people who were arriving there. Turned that into a group travel business. It got very big very quickly thanks to SEO. So I learned SEO, I learned NCM. I was part of that world when Web Master World was starting. So I was friends with all the founders of that. When Google bought GoTo, which was the online auctioning system, which became AdWords. So very embryonic. And then when that business unfortunately died at the end of with the financial crisis in 2008, kind of took those principles and applied them into publishing. And again, long story short, was turning around businesses that had trouble. And, they were, I think the thing was that there was a lot of stress in these companies. They didn't know what to do. They were panicking. And because I'd been through the stress of a failed business before and I had a bit of resilience, it was helpful for me to be able to turn those things around. And then long story short, got invited to work in web games, which was, it's noisy. There's lots of people with opinions and lots of people doing things that aren't core and really focusing. I just got people to focus, which is exactly what happened at the Game Lounge. Lots of things going on, lots of investments, lots of acquisitions, lots of people kind of hanging on the edges, assets that weren't really driving anything. And I focused on really kind of core home zone work and being not boring business, but being strategically boring. Trying to make sure that everyone understands what is supposed to be done and what the expectations are, making sure that stakeholders are happy and confident in your plan.
Tell me a little bit more about this turnaround, the resilience that you built and the turnaround idea, because that's not for everybody, right? Like a lot of people come into businesses, they want security, a salary, whatever that is, right? It doesn't matter, and there's nothing wrong with it, but it takes a special type of person, I think, to want to go through that. And then also to have the focus, the sharpness of mind, the calm to be able to really focus on that, what you call home zone. So where do you think that came from, Richard?
I like a challenge. I always like to be in the center of a room in a party. In a rugby term, I'm always going for the middle of the pack. I just want to be in the middle of it all. And I also want to bring value. The last thing I want to be is sitting there taking a wage and hiding and not doing anything. I've seen plenty of people in my career that have done that. They go into business and they don't cause trouble and they keep it easy. They hide down, they sit on other people's meetings just to look busy. I've seen all that. I was at Nokia for a bit. I saw that. I was at PwC. I saw that, in these big companies. I'm just not that person. I thrive on energy. I thrive on positivity. And it doesn't always work. People don't always warm to that because they sometimes can think I'm a bit too aggressive, just in terms of my motivations. But, when I'm looking for things, I've been quite lucky that I've been able to choose my bosses mostly. And that's very important to make sure that you care and give a shit about who you're working for. It's certainly when I went into Game Lounge, people kept asking me before that, what are you going to do? And it wasn't about that. It was who I want to work for. And I made the board there, and Jonas, and I'm still very good friends. Things are very good between us. Nice people with a good, honest mandate, but something to do, not just because somebody's left, somebody needs to take their place. It's like, we have a mission. We've got a transformation plan, and that's exciting. And in terms of resilience, my mother died when I was 25. That was very difficult to get through from a family point of view. My business failed when I was 38. That was very difficult. We lost all of our money, all that kind of stuff. So, when you go through those sort of personal challenges, it does build a second skin. You do realize that life goes on. You just go, you withdraw and then come back later stronger. And I thrive on that. I thrive on the challenge. I thrive on the kind of ringing the bell, sort of commercial person. I like it when things turn around in a positive. So I think I sent in the pre-notes that the first year of our gamers is amazing because we just broke every record. We grew by 40%. All the things we tried worked. And similarly, again, at Web Games, the first year of lockdown, our profits just exploded because we'd got everything in place. We were already remote. We already had the systems there. We already had the team in place. It just meant that when the wind blew strong, because that's what affiliate is really, you're waiting for the wind to blow. When the wind blew strong, we went fast. So that's Knowing that could happen, I think helps with resilience, and also bringing people in or working with people who've got a similar feeling for it. You can't have a whole team of people like that, because in the end it becomes too aggressive and everyone just kills each other. If you've got the right blend and balance of people that actually are up for the transformation, you can see that there's a common enemy, whether that's a competitor or internal systems or the market's changing. You've got something to fight for. That could be very powerful.
One of the things that you say that you really value in others and also in yourself is that you don't want to bend your leadership to somebody else's will, right? Like we've all been in those type of businesses where people try to do that, right? Or where people try to feel that there's a certain way of leading. Where did you discover that? And did that ever break for you where you felt that you had to lead in a style that perhaps wasn't right for you? Because it's something that's quite, like I hear you talking about it quite pronouncedly. So it's, for me, that's, sounds like that's one of your core principles. And I'd love to understand a little bit better where that came from.
The leadership team is always the most important thing. And I can't remember actually saying that, but it's not my way or the highway. I'm just thinking about most recent examples and the ones before that. If you've got flow in your management team, concept of flow, which is like everybody's working in it, working well, and there's little conflict. You need some conflict, but not too much conflict. When you've got that position of flow, there's no better feeling. It feels like you are winning top of the league, Champions League, all those kinds of great feelings. And even if you stumble, it doesn't matter because you'll pick each other up. And if you've got disharmony or disunity or somebody that starts pulling against, it can be unbelievably difficult and demotivating for everybody else. So I think that's the most important thing. It's not my way. As a CEO or business leader, you're not saying, look, you have to follow me. There's a lot of listening. So my primary job would be listening. But at the same time, sometimes pushing through and not compromising on a vision, because it can easily get diluted. With 5 people around the table, not everyone's going to agree, but you just have to kind of disagree and commit. It's a phrase that one of my very valuable coaches goes through about that ability as a board level team to disagree and commit and move forward, even if you don't fully believe in it, and then review and review and review. And if things do start to work, then that's good. If they don't, you can change.
I think it leads quite nicely to this concept of 3 horizons for people that don't fully understand how that works in leadership style. Could you maybe start with just explaining what it is? And then secondly, why you kind of stay out of that first horizon, focus more on the second, and how that then evolves into business strategy?
I think it's originally from McKinsey. It's a McKinsey concept from years ago, the 3 horizons. It's basically saying horizon 1 is what you're in now, it's BAU. Horizon 2 is just literally kind of what you're planning for. And then horizon 3 is right out on the horizon, which is, the world is changing, we're going. The challenge right now is that those 3 horizons are so concertinaed. I mean, if you look at what's happening with AI and Claude, and I mean, we had a conversation yesterday or this morning with somebody. Last night I had a conversation. Wouldn't it be great if we had this? And this morning I got an email saying, I've just built it. And I'm like, whoa. So that third horizon is like right in our faces at the moment. So you have to work out, if you've got a business that's like 200 people, it's really difficult to flip around to try and meet the needs of that. There's no point in a CEO being in the first horizon. There's no point. You've already set the strategic direction. You have a team of operators within your company. It's their job to do the BAU. That's exactly what Horizon 1 should be. So if you have an operations team or COO or those kinds of people, even a CFO, that's very much business today, business as usual. What are you doing today? And then my as a CEO, what I tend to do is focus on the second horizon alongside somebody like a chief strategy officer or something like that, just a plan. So you're slowly, maneuvering the BAU in a gentle direction, as opposed to saying, right, okay, shit, we've got to do this tomorrow. Let's just change the business right now. Because that's very difficult to do, especially with multiple people. If you're a smaller business, it's easy. And then with the mind to Horizon 3, what does it look like? What are the generations coming up behind us looking like, and what are their taste profiles, and how do they buy things? I've got 2 daughters in their 20s. And they consume and behave in a completely different way than I do, and my wife and my generation in a completely different way. I mean, yes, they're humans, and yes, they're eating and loving and driving and all the other things, falling in love and getting married, having children, like we all will do. But their pathways to get there are completely different. They don't use Google. They don't watch TV. They don't consume the media that we consume. So you're always having to understand what that might look like. Now, you don't want to go marketing to 15-year-olds, especially in iGaming and gambling. But you need to understand that in sort of 6, 7, 8, 9, 10 years, what the world will look like. And okay, so Horizon 3 technically is sort of between years 2 and 5, but nevertheless, you still need to have that view. of the far horizon, which is otherwise what are the obstacles in the way and where the opportunities.
I think one of the big challenges that people have is not being led by the shiny objects, right? And actually focusing. So what you call the home zone. And I'm jumping a bit ahead because I want to talk a little bit about one of the first things that you did when you came into the game lounge is actually in an environment where people are focusing on many, many different areas. One of the things that happened was selling betting.com, sportsbook oriented, US facing, not your core strength, something that people have been working on for a long time, and then buying near casino, which is regulated, Europe, casino based, which is your core strength. So I think one of the things that people have, even when they're focused on long term strategic second and third horizon areas, is that they still get distracted, right? How do you do that? How do you make sure that you're steering the ship in the right way without everybody going left, right, and center?
I mean, betting was kind of underway when I got there, right? So it wasn't as if I woke up one day and said, right, let's sell it. But it was definitely the decision to finally get that over the line. It was a good deal. It was a good team that was working there, and I got on well with them. We set them a couple of challenges when I first arrived, and it was clear that it was going to be too hard. And it was a second horizon purchase, basically. It was something, buying for the future because they were trying to insulate from iGaming SEO, which they'd gone through a previous period of difficulty. And it probably would have worked if it wasn't for that there was an offer on the table when I got there. And people said, "Oh yeah, we're going to do it," but I said, "Look, well, it looks like we're going to do it." Then the board wanted to sell it, and therefore I'm just happy to do it. And the idea was that we'd take that money and you recycle it into a Horizon 1 purchase, which is what Manea was. It was home zone, and it wasn't just the asset; it was the people. It was very clear because when you're in this world of M&A, there's a load of people that just want to, sell and run. Here's my site. I'm off. Thanks very much. Give me the money. Now, I'm not saying there's anything wrong with that, but if anything does go wrong in the years to come, it's difficult to turn it around. And if you've seen some of the competitors, and there's lots of purchasing going on from the other well-known affiliates out there that grew and grew through acquisition, the founders just disappeared. And when the bad times came, then there was no real kind of resilience to bring it back. Martin, the CEO, and I got really well. I think it was one of the reasons why they chose us. They had lots of offers from lots of different people, and they chose us because I think they felt the chemistry is better. I really liked him in terms of his approach. He's a very strong financial journalist. We got on very well chemistry-wise. He had some really, really good ideas on content generation and how to manage a regulated market and the relationship he had with the regulator. So we were buying him more than the asset, really. And that's what happened. So it was an easy one. We had lots of things on the table. That was the one that we got over the line. There were still some other good businesses at the same time. But no, that was a very, very, very strong deal. And it worked out in everyone's favor. It was a BAU Horizon 1 because it just meant we could scale and get the multipliers.
So let's dive into the lesson there, Rich, for a sec. So home zone, explain that a little bit more, and explain, please, if you can, explain a little bit more at what you found when you arrived at Game Lounge and like how your mind works in seeing those things happening and then going, all right, what is our home zone and how do I align everybody behind this?
The home zone is effectively you have a 2x2 and you've got existing product, existing market, you've got new markets, new products. And then if you try and do both new product, new market, that's differentiation. That's a high risk. So it's about risk management. Where are the big risky areas? And the biggest risk you can do is building new products. The second less risk is going to new markets with your existing products. So, launching a new market as an iGaming affiliate isn't that difficult. You'll spin some pages, you'll push them out, see what happens. That's quite straightforward. But if you're building a new product like the sports betting products, or we had some predictive analytics, sports analytics businesses, we had a slot tracker. There's a number of things that we were building in product and expecting to then sell them to our existing market. That's got a much higher risk profile and you need to push money into the development of it. It might not work. There's a long period of iteration and gestation. So the home zone is really none of those. It's just basically doing what you're doing, investing in that, investing in people, investing in systems, making sure that the efficiencies are there. There was 260 people, I think, when I arrived at Game. And then when I left, it was about 130. So the trick is to not necessarily slash the business, but just look at all of the working processes and all of the duplications. And what you tend to do when you see a business that's grown through acquisition, there's lots of people sort of hanging around with great ideas, really, really good people, but there's just too many of them. They're getting each other's way. So you have to think of a way of teasing the efficiencies into the business. Unfortunately, letting people go, but in a friendly way, in a positive way, keeping them on side as you do that. It's difficult. It's not easy. And, letting anyone go is very traumatic and tragic for the rest of the company. I'd arrived and they'd done a round. There was going to be another one. We delayed it. And the beginning of the second year was very positive. And in terms of what I found, Yeah, I mean, the people are fantastic. You know, everyone there in Game Land are brilliant. They're really, really good. The trick is to try and get everyone playing properly. You know, it's like being a football manager. You can have the most amazing players, but if they don't work as a team, then, you know, it's counterproductive. You've got to get everyone focused on the right thing. It was very difficult to do that. And the other thing that's the challenge these days is the remote nature of work and trying to get everybody really aligned when they're in 16 countries, slightly different time zones. And of course, there's layers and layers and layers. So it's difficult to get the message down to the right people. That was really hard. And that's really hard for every company now. That's the biggest challenge I think any CEO has right now.
I want to reverse a few years and talk about web games. Before we were talking about Horowitz, and we didn't really speak about his concept of management debt, but that's really what it comes down to. You said that one of the lessons from web games was that you learned that delaying hard calls is never kindness, it's just deferred pain. And that usually that pain escalates. So tell me a little bit more about that. What was the specific moment when you understood that? And what did you take from it, maybe into some of these decisions that you had to make in Game Lounge?
The hard thing about Hard Things is a good book. It's of its time. It's from the VC era of, you know, and Sand Hill Road in Silicon Valley when they're investing big money into these big technical bets and the concept of things like technical debt management. You know, that's where that comes from in the way that you're inheriting bad decisions. You're inheriting the results of bad decisions. And this is something I had before Game Lounge and before Web Games, because I was doing some work previous to that in business that I've got money from the West Coast or in the Europe. They then realized that, they decided that the first thing they used to do as software businesses was go to US. They hired a very expensive CMO, US CSO, CRO. You know, they're spending hundreds of thousands of these people. And then it wasn't working. And then they got fired or left. They ran out of money. And then it was like, Richard gets called in. What are you going to do about it? And it's like, you've got to get that debt out as quickly as you can. I mean, you've got to just chop, go back to home zone, work out where your money's coming from, become default alive, not default dead, which means you're making more money than you're costing, and then go for there. But that wasn't the case with either of Web Games or Game Night. Both are profitable. They were just a bit lost. That's just basically all it was. And it was just really making sure that identifying the key management people, bringing in a couple of people from outside and just trying to get back on an even keel and then moving forward fast. That's it. But the hard thing about Hard Things, you know, is people use that book as to say it's a justification for firing people. It is, but you've just got to be dispassionate. You know, the thing is, you know, the business doesn't have feelings, right? It's just not your friend. Commerce, your competitors, everything about life in business is trying to kill you or get you fired, right? So you've always got to bear that in mind. And therefore, when hard decisions have to be made, you have to be dispassionate about them and just let common sense prevail. It's difficult. It's one of the hardest things, and not everyone can do it. And that's why not everyone's a CEO.
It's one of the things that I heard you saying elsewhere as well, is that really being a CEO comes down to your ability to make tough calls. That's really what differentiates you. And a lot of people see that position and aspire for it. You don't have the ambition, but that they don't want to be in that hot seat, right? Like you spoke about investors above you. You still have a boss essentially, right? And you're only as good as your last quarter in terms of profits and performance.
Yeah, exactly. That's exactly it. And you some things happen, and you just have to face it, and that's it. You just move on, brush yourself off, and go on. I mean, everyone's got a boss. Very few things in life mean you are completely autonomous and autocratic. I've said to you before. I think I said to you before in our conversation. Where do I get my centering from? I'm not there to be the most popular person in the company. That's just not my job. I'm there to make profits for shareholders, which is what I've been hired by. And at the same time, if I can do that by having a happy company, and you know, in theory, happy companies are better than unhappy companies, then all to the good. But that doesn't always happen, and life happens, and people happen, and humans are different. You know, you have a bad down round, or you go through a period of time where you're very generous to your staff, and then all of a sudden you can't afford that anymore, and therefore the mood changes, and it's very difficult to get it back. You know, that's something you have to always be mindful of.
And then talk a little bit more about your concept of the 10-30 talks. I love that.
The 10-30 rule. Yeah. Yeah. So this comes down to, I mean, I can't remember where I got this from, but I mean, it's definitely my rule. And I was working in travel, you know, it's a very, very, it's like iGaming. You go out, you meet people, and especially in my 30s, it all gets very exciting and fun. And then it kind of stops being fun. And especially as a business leader, you get the honest conversations from your team or from various different people. And I just remember being in the loo once in the toilet in a bar in Bristol, and just minding my business, and somebody came up to me and said, "Why wasn't I promoted? Why didn't I get that promotion?" And I'm like, okay. And then I think the next time I went out, it was another kind of very awkward conversation. And it worked out in my head that 10:30 is the kind of cutoff. If you start about 7, by 10:30, that's when everyone gets their confidence in and they feel as though they can say whatever they want to say to the CEO or the boss. So I just came up with the 10:30 rule. As soon as that clock ticks, unless I'm having a really, really good time and I'm in a very social environment and no one's getting on with me with a career conversation, yeah, then I just go, 10:30 is enough. Nothing good happens after 10:30.
One of the things you did say in that same conversation, maybe it's a while back, so maybe you don't remember, but I'll jog your memory, is that how important it is to manage upwards, right? So you gave an example of, you gave some really direct feedback to someone that said that, saying, well, actually, you said it jokingly, I don't know who you are. I don't know exactly what you do. It was maybe 3-4 levels below you, whatever that was. And you said something like, but I actually kind of mean it seriously as well, because it's all about profiling. It's not about being a dick, but it's about personal branding inside the company. So talk a little bit more about that, if you will.
Obviously, from the CEO, you're always managing upwards because your main people are, they've hired you, got to make sure that they're on board with you. And when that ends, it all ends. But similarly with juniors, and I've said this to my kids who are in their first jobs, I think the original phase was punch up, not down. So, punch up. So if you're going to complain upwards, don't complain downwards, because if you complain down, it spreads and then you get negativity, which kills the flow. But also managing up. It's very important that you have a relationship, or at least a hello relationship or a conversational relationship with people above you. Because number one, the hardest things about being remote is that you don't have that chance to water cooler with a senior manager and listen to people and look what they look like and see how they react to things. The managing up is very important, much more than managing down. I've always thought that in my entire career. I've always really invested in the relationship with my line manager, and then one above. And it wasn't trying to get around the person above me. It was just to understand and empathize with their problem, my line manager's problem, to understand who they're having to deal with and report to and all the emotional vagaries of that, and understand where your career path's going. And if you even want to follow that career path, because sometimes you can do that and meet those people and think, Jesus, I'm not going to do that. That's not for me. I want to do something else. But yeah, if you're looking above yourself, you shouldn't be intimidated by people above you, because they were just like you were 2 promotions ago. And I think that's a very important thing for all people in their first, second, third jobs, is to really invest in that relationship. Sometimes it's difficult. Sometimes you just think, they're a dick and you just don't like them. But unfortunately, you can't work with people you like all the time. You just have to find a way of navigating it somehow where you do have a good working relationship with those people. And if it's impossible, then you're in the wrong place. It's as simple as that.
I'd love to talk a little bit about the period after Web Games, if that's all right, Richard. You took 6 months off to kind of recover physically, mentally. You were looking for the right opportunity, the right person, really, I think, mostly, right? The right environment to be in.
It wasn't actually my intention. I just felt like I'd gone as far as I could with Web Games. I could see difficulties with the way attribution was working. The GDPR laws were changing. The thing about e-commerce affiliation is that it's very data driven, and you're talking about last click attribution that gets paid for it. And as a network, it's very difficult to keep on top of that. And with data privacy and cookie tracking and all the other things, it was just like, God, this is really difficult. I just don't think I'm going to be able to take this forward any further. And actually, that's what's happened in the last 2 or 3 years. The industry is really struggling with zero-click attribution and lots of different types of affiliates. So I had a good conversation with the owners and said I was going to drop out. And then they just decided that as part of my notice period, it makes more sense for me to go on garden leave than to stay managing the company. I had a long notice period. And anyway, so I got put on leave. And then it was a case of, what do you want to do? I ended up renovating our property in Mallorca for 3 months and just keeping an eye on what's going on. And yeah, it was definitely, it's like, who do you want to work with? Who are you going to get passionate with when things are going against you? Who are you going to trust? And it's all about who you want to work with. And that's definitely the conversation I had on the way into Game Lounge. And even now, come at the other side, I'm still very good terms with those guys. So they're brilliant. Jonas is fantastic. Product's fantastic. Board are very good. So it wasn't being difficult to move on. And the same will be next, whatever I do next, I'm looking at all sorts of things. But I've been very lucky to have been able to make some really, really good network contacts over the last 2 years. And before that, in e-commerce, some really nice, good people. Obviously, there's some sharks and some bad guys and all those kind of people out there. And, in the main, it's good. And I'm looking forward to doing more work with more people like that. But again, I'm, right now, I've got a business that's wants to work in corporate development. There's a big opportunity to consolidate in the industry. I'd like to be part of that. AI is now creating new inflection points. The whole thing around canonical SEO that's really blowing a hole in the middle of SEO affiliation needs to be managed and understood. And, there's a big opportunity there somewhere. So that's kind of where I am.
You, after those 6 months, you obviously joined Game Lounge, spoke about it a little bit. Next called you an industry novice, which I don't know, everybody always does it in iGaming somehow, right? When somebody's new, but you took Game Lounge from 22nd to 13th in the EGR Power affiliate ranking, generated 60 million in cash flow, which is your number one KPI, right? We were talking about it before we started recording. But then you left recently. So how did that happen? Talk a little bit more about what you can share, at least.
Again, I've gone as far as I can, and I won't go into too much details, but it was very amicable. It was just, we sat down one day and said, this just isn't working. And also Jonas has stepped back in as an interim CEO. He's a great guy. He's got founder energy, which is something you need, especially in a business like specialist game like with the people they've got. Him and Frederick are just so fantastic at just getting shit done and pushing the buttons they need to push. It just makes sense. It just made sense. So yeah, that's pretty much where we are. Again, it was very amicable. It's a great company. Very happy. We're all still friends, still messaging each other.
And so you're in that same reflective period, I suppose, that you were in perhaps after the previous role. What's coming up for you now? What are you do you know what you want to do and where you want to go? I'm
good at fixing things, and there's a lot of things that need fixing right now. I've been really busy the last couple of weeks, really, really busy with people, just talking to people asking me about, some of this tough stuff that's going on in our industry right now. I can help them. I'd like to be some kind of consolidator. There's some good value in M&A right now. I set up a partnership, really a consultancy partnership, just to see that with projects I can look at that are going to make a difference in the industry. It's massively in change. And I spoke to somebody yesterday and then they delivered a product this morning. Now, what does that actually mean? What does that mean for the industry? What does that mean for regulation? What does it mean for player safety? What does it mean for black market, white market regulation? There's lots of things around that. There's so many things that this massive rate of change will bring in terms of opportunity. And it's people, and you can't replace the affiliate relationship, affiliate dialogue with machines. You just can't, because at the end of the day, you're trusting it. So you've got media, you're lending it to another partner to then monetize and then bring you the money back. Now, if you think you can do that through agents and robots, it's just not going to work. That trust will never exist. And this is purely plumbing, and that just will never happen, because then you just got programmatic advertising. And business in general, if you think about, okay, I'm going to build a new business and buy a new business or whatever it might be. What you're building is the relationships, you're building the deals, you're buying the things that humans have put in place. And the moat may have changed, but that human to human is still there. It's a trust industry. And I know that there's a lack of trust in iGaming and affiliation generally, but there's enough of it there to make a difference. And that's the measure. And even branding, any kind of marketing is just a brand promise. It's all about trust.
I've got 3 questions from our mastermind members, actually. So Michael asked, what's your take on layoffs taking place inside the industry? Do you think it's transitional or fundamental, or just following the wider economy?
Yeah, I saw them. I've seen various different messages about that, and people are going, oh my gosh, when will it end? We are in a transitional time. It's akin to when I said earlier about the first .com boom. There's an article by a guy called Clay Shirky back in 1999, I think, about what should newspapers do to survive the internet age. And his article, the answer is there's no answer. There's a total disruption going on. Now, I'm not saying that iGaming is going through right now, because it's a digital business. However, the fundamentals used to be, very good, high quality content, get it into Google better than your competitors can, and then Google reward you with positions. Now, that position is completely disappeared. That's gone. And you can argue that, yes, AI isn't as good as a human writer, but it's good enough. And as we're saying at the moment with canonical stuff in the SEO results, people are gaming it. The news about how Google works was leaked last summer. So people have kind of worked it out. So that's a fundamental shift in how it's going. Now, where's that moving to? It's moving away from, like I say, the kind of build the funnel and you just guide the traffic down it, to much more player relationship management, CRM, rewards retention, making sure you have a really good relationship with your existing customers. So I think it's a replacement. It's not necessarily a killing fields. It's just a kind of tooling of understanding. We'll see what happens. I think what will happen is there'll be a big, let's get rid of all of our content, let's get rid of all of that stuff. And then they'll realize that they've gone too far and they'll start rehiring again, but maybe in a different way. But no, there's definitely, again, I just built the dashboard last night. the dashboard that I always wanted at Game Now, I just kind of built it in an hour that I couldn't get in 2 years. So it's those sort of things are just unbelievable. Data science and all those kinds of things you can put it into the LLMs. That's just amazing. But there is a limit, right? And we'll hit that limit quite soon where people start to stop trusting it, or the costs of running these things are so high that they're going to put the charges in. So Anthropic might become very, very expensive, more expensive than you can afford. So, don't build your business on that stuff too early because, you might end up costing you more than you think.
So Tom, Tom Galanis is asking, having worked in the broader affiliate marketing world previously, what's one thing that exists as a standard practice that iGaming has simply failed to adopt and should?
Data privacy seems to be completely ignored. I mean, I can't tell you how many times I've seen a secret list of 50,000 players with all their details on it. I mean, this is unbelievable. It's shocking every time I see it. And then people just happily stuck them into their databases. But then on the other hand, it's a virtual product, so it actually moves faster than e-commerce. E-commerce is limited by things like delivery returns and all those kinds of things you get when you're shipping products and product availability. And the profit margins are much, much lower in retail than on gaming. And that can be a good and a bad thing because they're making so much money. Oh, there's so much money to make. It draws in some very interesting characters that you probably wouldn't see so much of. You do see it in e-commerce. And of course, you see there's plenty of bad affiliates there and their cookie stuffing and dropping and all the other things that you don't tend to see so much here. But this is a much more enjoyable industry to be in. I mean, there's so many events, there's so many opportunities to meet people. It's like every week there's another thing. And in retail, you don't have that. I mean, you might have one a quarter if you're lucky, unlucky. But yeah, I think that's the main difference is really around data and what people are prepared to do and not do. It feels much more sharky in this world, of course.
Well, one of the things I heard you saying before, Richard, especially in e-commerce, because slower margin, there's so much more focus on yield. Whereas, when you think about the different stages of players and maybe the different buckets that you would put them in from a more traditional CRM perspective, in affiliate, in iGaming, it's more about the acquisition, like the initial thing, rather than the value optimization.
Well, yeah, exactly. And I think the industry, from affiliate point of view, has been totally addicted to free traffic from Google. And that's not something you'd see it a bit in e-commerce because that's the voucher codes. But that was never the real kind of focus and point of what it is. You've got things like closed user groups, got Blue Light Card, or you've got Money Saving Expert or Deal. There's communities of users that are have a lot of affinity with affiliates that you don't really get. I mean, affiliate would use one of Game Manager's sites or one of Ledger's sites or one of gambling sites. They just flip around. There's no relationship to it. Even Ask Gamblers and Casino Guru, they're just there to moan about when they haven't got paid. They've got the payouts. That's kind of what that is. I just don't think I don't know, maybe I'm wrong, but it doesn't feel as though they're fighting on their side. Whereas in some of these cases, like Top Cashback or Quidco, it feels like they are trying to bring the right deals into them to get discounts. It's much less sophisticated in iGaming in terms of attribution and who's driving sales and the layers of influence. I mean, there's a bigger debate now, isn't there, in this industry about influencers and whether they're worth it or not. But I think that's the wrong question. If an influencer is raising your brand and making your brand well known, there can be a lagging factor, but people remember it as long as it's promoted enough. You don't have to get an FTD on day 3. You just need to make sure that there's an affinity between that influencer brand and actually your brand.
Yeah, I think that's always historically been the difficulty in iGaming. There is so much focus on direct, instant ROI and direct traffic rather than brand building and long-term value creation because it's not directly measurable, right? And that's the hard piece. And I think that's as margins get squeezed and
it's the opportunity. If you look at those SERPs that you're seeing at the moment with these guys, and it's like best non-gam stock casino UK, .com. That's not a brand. I mean, that's just a funnel, and those funnels can be replaced tomorrow. And I know that everyone's chasing the money today, but if you can build a good brand that people trust and you've got the relationship from a CRM point of view and they really believe in you and they go to you first, they don't need Google. They'll just follow you wherever you go. That's very important that people forget. But it takes years to do that. You can't just do it overnight. And the challenge with branding is, I think it was Rory Sutherland or somebody said it, the brand challenge is to make something new feel familiar and something familiar feel new. There's always the challenge of that. So if you've got a very strong brand, like toothpaste or cereal, you're always having to think of brand invention. And if you've got a brand new casino or brand new whatever, you need to make it feel familiar. That's why they do these attachments to famous people to say, well, that's, if they attach themselves to it, you can trust that. But that's always the brand challenge of anything.
Thanks. And the last question is from Josh, founder, CEO of 2 businesses. And he asks, if you were running a UK-focused iGaming affiliate business today and been heavily reliant on SEO and just taken a major hit to traffic and revenue, like everybody. What would you do over the next 6 to 12 to rebuild it into something more durable? And what is the one thing most people in that situation are getting wrong right now?
SEO affiliation right now is a totally crimson red ocean with the players in, and they're just, so I think you've got to build, and I'm having this conversation now with myself, should I build another affiliate using the sort of e-commerce principles that I know? And I would do, but I would start as a user group. I would start with 50 people that are loyal players. I'd start with a small group of people, whether it's a WhatsApp group or Telegram group or something, and then build it that way. The social media to a web media based, or even an app media or product, and go that way. I certainly wouldn't try and get number one on Google tomorrow, because there's just too many sharks in that water. You need to work out where the blue ocean is. The blue ocean is an open ocean you've got to yourself. And also really focus on a particular niche. Because if you go for all players, I know that, poker players, but they're not the same. And you've got girls and boys, and you've got older and younger, and you've got people in one country and another country. It's all about niche to get going. And then once you can get that niche going, it's about pushing out from there.
Yeah, it makes sense. Blue ocean versus red ocean. I always love that concept.
With the tax rise in the UK now, it's the reddest of red oceans. It's going to be so difficult to do anything. It costs a fortune to get anywhere.
Okay, that's my questions from the group. Last one from me, mate. If you would go back to kind of where you were starting out as a new CEO at Game Lounge, when you first moved into iGaming, what's something that now in retrospect you would kind of tell yourself to do differently in your first, let's say, 3 to 6 months, if anything?
I don't think I'd have changed anything in the first 6 months. I probably, year 2, may have been a bit more aggressive on pushing strategy away from SEO. But I don't know, I've got no regrets. So there's nothing you can do about it. So there's no point. I'm looking forward to the next, whatever it might be. I no, there's nothing I would change. Nothing at all. I think it was a good stint. I cleaned the business up. It's in a much better position structurally than it was. The guys are in there and they're going to do well.
I love it, man. All right, Richard, thank you very much for being so open and honest and talking, spending the time together today. It's been fantastic. Thank you.
Thanks very much, Leo. It's great. Thank you.
Thank you for listening to the iGaming Leader podcast. If you're a VP, a director, founder, or an executive in iGaming, making the biggest decisions alone, that's exactly what I've built iGaming Leader Mastermind for. Small inner circles of vetted senior executives, weekly hot seats, and accountability from people who understand the effects of the decisions that you need to make. Find out more and apply at igamingleader.com. And a final thanks to our sponsor, SumSub, the full cycle verification platform for iGaming operators. Player onboarding, AML, fraud prevention, all in one place. More at sumsub.com/gambling. See you next week.